patterns fail. All right, so this typical bull flag, I like to see it fail, and then, you know, the way people will react to this would be, well, patterns fail. All right, so this typical bull flag, I like to see it fail, and then, you know, the way people will react to this would be, well, bull flags failed, so they'll short it, or they'll short the retest. So actually, I'll redraw this because it's a good example. Right, so you got a typical bull flag. Let's say it's like that, or whatever pattern you call it, pennant or continuation. Price comes up, consolidates in this pattern, and then breaks down. All right. The way retail will trade that is one of two things. They'll either short the breakdown or they'll short the retest. Short here as it retests. They won't typically wait for it to actually fail, or even if it does, they'll typically short the breakdown. They're the type of people we're trying to trade against anyway. The people who wait for more continuation, the people who wait for more confirmation are not really the people that you're trying to beat, because they're typically a bit better. You're trying to beat the really bad traders who short the breakdown. So what I want to look for in this is that same pattern where it breaks down, but when it breaks down, I want to see signs of reaccumulation. So when you get this pattern, what you're going to have when it breaks down is you've got stops resting here and stops resting here. So as it breaks down, you're actually sweeping long liquidity. So shorts, sell stops, so the longs getting stopped out or liquidated. So there's a good chance that if you can then see some kind of reaccumulation down here, that it's actually going to be a fake out and go higher. And also then that would, this isn't maybe drawn perfectly for that, but let's say this reaccumulation happens and then it comes back up. You'll also get the trend line traders who'll short the retest of the bull flag or whatever pattern it was. They'll short here, which will add fuel to the eventual break higher. So patterns in this sense are valid for me because, of course, you have the typical pattern that everyone knows of, and they expect that to just break out nice and cleanly higher because it's meant to be, these flag formations are meant to be a continuation pattern. That's not how I like to trade them. I like to trade the failure of them. The failure of it is not the fact that it broke down, okay, because you have to remember that this is sort of like an extra level of thinking beyond it. Beyond you've got kind of first order and maybe some second order thinking in here, where you've got trader one, okay, so the most basic retail trader will see this and they'll go long because they think it's a flag and it's going to break higher. Trader two, who's thinking a bit more deeply about it, thinks, okay, well, this is a flag, it's going to be a fake out. Retail retard is going to go long, therefore I'm going to go short. And then it breaks down, so retail or trader number two thinks that they're right in their thesis, but then in reality what's happening is it's actually, trader number three who says, I'm going to let all this form, I'm going to let the long get wrecked, I'm going to let the bear, let the short get into his position, and then I'm going to jump in whenever we reaccumulate here and blast everyone out of it. So that's sort of how I want to trade them. I want to be number three on that list. I want to let things play out. It meets a lot of criteria that I have for trades. The number one being patience. So the fact that you've let all that play out in front of you puts you in the better position. You can see the full chessboard, you can see all the moves, and you can then react accordingly. The person who longed the flag has jumped in completely impatiently, and the person who longed or shorted the breakdown is, they've waited for an invalidation of the flag, but they didn't wait for a confirmation of that. So they still are impatient. Just because a flag breaks down doesn't mean it's automatically a short. It would have to come back up and bearishly retest to then confirm that it's a short. So playing this along here, I want to show where it actually formed today and the trade I took live. So here we have the beginnings of the flag that we're going to be trading, okay? And I'll slow this down a bit. You can see here now that price comes up and begins to form a flag. So you know from previous teachings of mine that when price goes up and into a pennant or a flag, whatever formation you want to call it, these are typically continuation patterns, because the price moves up and then it consolidates. It's typically consolidating to move up again. Similarly, that when it breaks down and it consolidates like that in a compression, it's going to continue. It's typically a continuation pattern. So we can see now that this flag is formed in the eyes of retail traders. And let me just pause it here. And we'll just do a little review. So the way that the average day trader will be kind of marking this out is like that. Okay, so we had the top end of the flag, we have the bottom end, we have a couple of taps of it, and so for a start, most would have been going long here if they're long biased and believe the pattern is going to play out. They're going to have gone long there, and obviously got wrecked almost immediately. They're probably gone long there with their stop here, so that low becomes a target very quickly. And then anyone who's shorting now has seen this break from here, and they're probably going short here. All right, so you're getting a lot of selling because you're going to get the longs getting stopped out along with the breakdown shorters. So you should expect this move to push down a little further just from the amount of sells that are coming in. And as we play it on, you can see that it kind of consolidates briefly, but it does eventually break down. I'll zoom in a little bit more. There you go. And so now at this point, we've broken down here and we swept out this low. So this was the main target, really, in my opinion. So when the pattern is broken, so I've got everything I want to see now. So we've got sell stops here where my red line is. We would possibly have some sell stops here as well. And the bottom end of the flags, the initial low, where there would be more stops, I will put that as my invalidation for my thesis, which is in this pattern I want to get long because I've seen it break down. So we know that anyone who longed the actual flag, they've been stopped out because it swept them out. I want to get long here because there's breakdown shorters and I want to absorb them and then push them the other way. But if it goes below this low, I would invalidate that trade. So if we happen to nuke down into here and take out the yellow low, I would just consider it to be an actual reversal, because at that point we would be like here, and price would then just look more like it's reverting back to this consolidation. It's probably going to sit there for a while. All right, so that's an important thing. So that when the flag is created, whatever you want to call it, the top of the pole to the bottom of the flag or whatever, basically the initial drop, the low of that shouldn't break for this structure to remain valid. So what am I looking for then? Well, we swept out a low, so technically we've now done enough for me to get in a long, as in we've swept enough liquidity for me to get long and target the highs here and the highs here, because they're going to be my targets. I'm just going to put them in green up here. And if you zoom out, which the purpose of this video isn't to recap this trade exactly, it's more about the pattern, but if you zoom out, which you always should have done from the start, the main reason I was long biased here to begin with was because we have a lot of liquidity here. You can see these equal highs here, highs here. So that's my ultimate target. You have those highs, they should get swept. So the reason it's confidence, I'm adding more confidence. The reason why I'm long biased is because we came all the way up to this key level of liquidity and didn't tag it. So this is a really perfect setup. You don't get these too often, which is why it makes such a good example When I say you don't get them too often, you get them a lot on the 1 minute chart like this is. It's just very hard to be able to spot them and execute them consistently over time without, fucking something up. Because when these form on a 15-minute or a 1 hour or a 4 hour, they play out much cleaner and you have more time to react and make your decisions and everything like that. But when they play out like this in a 1 minute chart, it is, it's in the heat of the moment, but that's the nature of scalping. So anyway, currently now as we're developing this, I can see this high as being my key level. So you know that I play under overs and over unders, which is that head and shoulders type pattern. Okay, that's how I trade my entries, because you have the clearer signs of reaccumulation. So here would be my high. I would consider this led to the lowest low. So let's let it play on and see how it develops. So I wouldn't be in a long yet. Just pausing it. I'm not in a long yet. I don't have the trigger. We've swept the liquidity, but we haven't confirmed that the bottom is in on a 1 minute. And now we've got flat lows. So there we go. Now we've swept the second lows. So even more confident now in a long trade if we can get the setup that I'm looking for. But we've swept out a lot of liquidity in this small time frame. And as I pause again, we've now broken back above this first line. So when we come down here, we swept it out here initially. We pushed away and we swept again. Now we've broken back above the initial line of where I think the true target was. It's not enough to get in along yet, because as you can see, this now becomes my high, because in my chart these blue candles are up candles and the white ones are down. So the last up candle before the lowest low, so this was the lowest low, all these down candles, so this was the high that led to it. So for market structure to break bullishly, that we have to go back above that and close through it. And when I'm scalping these on a 1 minute basis, I typically want to see a 5 minute candle close above here. Then that would trigger me to go long, and I would long anything, any retest back below the line, right down to the original low that got swept, which you could say is this one or possibly that one. But essentially, I'm just trying to get longs filled here. All right. Okay, so we'll play it on. So no structure break yet. All right, there we go. So we do have a structure break here. You can see price comes back down beneath it. In this instance, in real life and in the thread, I took a trade. Put half my trade on there. If you go back and look through it, you can see where I put it on. I entered half there because even though it didn't close like a 5 minute candle above, and it actually sort of pushed up and then dropped down, what I'm kind of seeing here is price looking to go higher much more than it's looking to go lower. So you can see a lot of upper wicks, so that's indicates the price is getting pushed lower. But the more times it comes back up, then it indicates that there's absorption down here and we're actually trying to go higher. You see it pushing, pushing, pushing. That would indicate to me that we're squeezing on shorts. So I entered half there. Now the other half would be as soon as we close back above this line. All right, I would be willing to enter another half, my second half. Okay, so right there. Let me just see there. Okay, so whichever one, if you wanted to do it on this one here, because it did close through, or on this one. Regardless, I'd be entering my other half there, and I did enter my other half there, because again, if you're going to reject from these areas, you shouldn't be consolidating up here like that. The way this is consolidating basically is consolidation that's going to break higher. You can see that pretty clearly. We're moving up and it's consolidating and it's setting a flat high and pushing and pushing and pushing, and eventually that will break. So that's my plan. That's my trade. Sorry. So I entered half, whatever it was. Like basically, let's say it was on this line. Stop below the low, because remember on this sweep, we're now confirming that this breakdown was an absorption of all the sellers here. So both the forced sellers and the willing sellers. So the stopped out traders and the breakdown shorters, they've been absorbed here. we've shown low time frame signs of reaccumulation. So now we should break up and break up pretty quick. You would have target 1 is here, maybe at 2R, target 2 at this high, but really my target 2 would just be here, because this high is so close to that high. I know this is the main target. It's not going to come all the way up here and sweep this one out without sweeping that one. So it's a 3R trade. If you wanted to take some off at this high, you could. That's up to you. I'm not really here to talk about trade execution on this one. I'm talking more about how the flag pattern is playing out and how I like to counter trade it, essentially, and be in that third category of person. So you're the guy who's just camping up, you know. You're the guy sitting, waiting patiently, like a sniper, letting everyone else make their decisions, make their own decisions, and then you're coming in and taking your little scalp off them. So, so what next? Was there anything else, or I'll just let it play on? I'll let it play on for now. Alright, so we get some more consolidation. We break higher, eventually breaking out of it. So now, obviously at this stage, it's a very strong signal that we're going higher. The next area to look at would be the retest of this trend line. So I'm going to get rid of this one, because now it doesn't really matter if it's a flag or not. Because obviously the flag's been invalidated, you know, in the eyes of retail traders. But what they will be looking at now is this trend line. Okay, so the trend up, trend up, trend up, and we broke that. So the retest of that is where people are going to, typically the people who've been wrong here and wrong here, they're about to be wrong again, because they're going to try and short this. They're going to try and short the breakdown of this trend line, because they think, well, this is a breakdown and it's going to fail here and go lower. But what they haven't noticed is they're probably not a good price action trader who's looking for reaccumulation, and they haven't noticed that we've swept out liquidity and reversed. So we should be going to sweep liquidity above. So there you can see right away we've tapped off that line. So I'm not sure if it closes back below it again. No, it just continues right on. And obviously this trade was very quickly executed and over before almost before it started. So in 3 minutes of impulse, the entire trade was hit. So you can see in the group, I took my profit at 57.5, and I took the second bit actually slightly below the white line. So my average was still around the white line, because I wanted to see was it going to be continuation, and there wasn't. It was just a straight stop run. You know, so if we play it on, you can see. So I took half. I had half sitting and was taken out there, and then I took the other half after this bit. The next up move around there, I think it was maybe that green line, was where I actually took profit. So, and as we play it on to now, you can see what happens thereafter. So we come all the way down and sweep out that low. So this is like, again, just in summary, which I'll delete all this off. And this is now, I think, live price action. So in summary, the reason it's a good example of a scalp, okay, playing the chart pattern in a contrarian way, so letting everyone else make the wrong decision with the chart pattern. And if you look at it here, actually, there's probably even a moment before, like this and this, when people were sort of, because you have to remember that these people who trade chart patterns like that, like retail, they're trying to confirm their bias. So they want this to be a flag so they can go long. So they'll be drawing every line they can and see this and that and this, and they go, oh, all right, oh, look, we're breaking out, flag, and they'll have gone long here, and then that will have reversed. So what do? They move their lines, of course, and turn this into the flag. So you can see we're actually very cleanly, they got wrecked here. So there's one area got wrecked, so we went long, got wrecked, comes back inside. They're like, okay, well, I was wrong with that breakout, but I'm going to go long here because we're going to confirm and go higher. They got wrecked again. Then the breakdown shorted it because it failed, in air quotes. And then we had reaccumulation, and they got wrecked again, got squeezed super hard. And not only that, this is a good example, just before I finish, this is a good example of the warning signs of sitting in a scalp for too long. So it's easy to sit and admire your work because you caught this great entry and you spotted this reaccumulation. And if you didn't take profit off at the target, you then got wrecked within a couple of minutes and right back down to where your stops would have been. So this is my exact level that I marked where my stops were. And you'd see if I had sat in that trade too long, I'd have got stopped out. So we probably go higher now, just based off that. We probably bounce back up into this area or something. Don't know if it takes out either side. That's probably the move. Typically, when you get these high volatile moves, that's it for quite a few hours. But that's a good little aside to the main point of don't sit in your trade too long. Have your targets. If this flag breaks down and reaccumulates, your targets are very clearly here, and then the one I showed you earlier, the main high. Get out on those. You're scalping. You're getting in and out. You're not here to take 10,000 points out of the market or big swings. You're scalping in and out. And if you had done that, you could have watched all this unfold and maybe even caught a quick long down here and took those other people's stops and maybe ride them back up into this gap.